Hey, my name's Jason Andrew. I'm a chartered accountant and co-founder of SBO Financial. So a lot of businesses have accountants already that they work with, but what we find is a lot of accountants focus on taxes. Our business is a little bit different. We focus on more financial management, which is helping founders get on top of their numbers from bookkeeping, CFO advisor, and financial modeling. So we had a client that joined our company about 2 years ago, and this e-commerce business specifically was using Shopify, and that was their primary channel to get sales. They actually launched through a crowdfunding campaign. And within the first 12 months of their trading, they did over $3 million of annual revenue across 3 different geographies, across USA, UK, and Australia. Yeah, so the business initially started with a crowdfunding launch, and so they had a really hungry audience looking for their product, and so they managed to pre-sell all of the inventory, which they then used to buy their stock, which they then started to distribute. So sales continued to flourish. I think the home and lifestyle kind of segment really boomed during COVID, so they were really seeing the benefits of lockdowns and things like that. But what was really concerning for them is no matter how much revenue they did, they always had cash flow problems. And I think this is quite a common issue for e-commerce businesses, where a lot of your profit is reinvested back into marketing, brand, and also inventory. And this business was no different. So despite sales growing really quickly, they always had lots of cash flow problems and actually struggled week to week to pay to even make payroll. Yeah, so because the business made such a splash in the market, and this was a period during COVID where e-commerce was really hot, and still is kind of, but it really hot at that time, plenty of money floating around. The business was attractive to venture capitalists and some private equity. So this business was continually hit up with cold emails from different funds asking, hey, can we invest? Can we invest? And the founders themselves were not really finance people. They were mostly mainly marketing product. And so when they had these funds approach them to give money, they're like, yeah, cool, like, I'd love to have you on board. And so the first question I was asked by any investor is like, show us your numbers. And so they showed their financials or the lack of, and were quickly shot down because the books were literally dog's breakfast. So we were appointed as their accountants / financial advisors to help clean up the mess. And through that process, we got A2X installed as the first port of call, just so we had accurate revenue recognition and happening through all the channels, USA, UK, and Australia, ensuring that we could correctly report discounts and refunds and all that sort of stuff. And then we, obviously just work through ensuring we're recognizing gross margins and all fixed expenses, etc. So this business, despite growing really quickly from a top line perspective, they always had cash flow problems. And so through cleaning up the books, we actually were able to diagnose exactly what was wrong with the business. And the founders initially thought that the cash flow problems were because they were continually reinvesting back into their brand and advertising and inventory. But actually the case was that they were discounting a lot to get sales. And so they were discounting significantly just to get new customers in the door, and what that was doing is really squeezing the gross margin. And so that was a really sore point for the business. So once we diagnosed this, gave that feedback to the founders, and we worked with them on different tactics and strategies to offer alternatives to discounting. They really turned their business around from what was initially losing money and scaling to something that was at least break even and a lot more sustainable in the long term. So fast forward 2 years, the brand is still hitting those strong growth goals despite kind of the economic climate at the moment. They actually turned down the investment for the venture capitalists because they realized that they could fix or solve the cash flow issues themselves and with our help. So so I think it's kind of the case study that we're really proud of, because we've really helped to shape this business, educate the founders on the importance of financial literacy and discipline within the company, and has really set them up, I think, to long-term and sustainable success to build a really great business.